Over to you, Paresh, sir.
Hello and welcome to another episode of In Conversation With. In Conversation With is a part of the CASI Knowledge series where we invite senior professionals from across the world, discuss and debate on key topics, and try to extract executable advice. So today's session is a part of season 2. Today's session is on cryptocurrency and blockchain. So while we have some very exciting speakers, a keynote speaker and other speakers, we also have an amazing audience with us today. Let's start with a few questions on the ground before we put on to the keynote speaker. So my first query is, one of the comments that you read online on blockchain cryptocurrency is blockchain as an industry is full of technocrats who see coding as a solution to everything. So a lot of people say this. So do you have a comment on that, Matt, Kamlesh?
Kamlesh, do you want to go first?
Yeah, so I can go. So I don't agree with this because blockchain is just not the technology. It's just some kind of fundamental and transformational change. How you will, because blockchain is some kind of consortium, some kind of building the trust on the business processes run nowadays. So I think just coding is not the solution. You need to understand where the blockchain needed and is there really some need or not. Technically, I think not that much. My personal belief.
Okay.
Matt, you
So
can.
let me ask one more question.
Yeah.
Again, it is said, and we hear this a lot, that the mining business in blockchain is completely based on public speculation.
So I'm not the right guy to talk about the mining because I purely work in the enterprise and industry use cases. Maybe Matt can comment.
Sure, sure. I guess I'll answer the first part first because it kind of intercorrelates with the second part of the question.
Mhm.
So last 2 weeks ago, I went to Mont Blanc and tried to get a new wallet, like a new little wallet for myself for Christmas present. And I thought to myself, this is probably the last generation to ever own a wallet. Anyone else, any younger people, they'll probably just have a phone. Similar to China, you have WeChat Pay and you're good to go. You don't have to bring your wallet. Even credit card is outdated. Since the internet was founded like 2 decades ago, we basically created a parallel universe within that world. So we have a real world that we live in, and then we have a parallel universe in the internet world, the virtual world that we also live in. With all the social media coming about, uh, Facebook, Instagram, everything, younger generation are spending more and more time in the virtual world than in the real world. And for obvious reasons, because there's more instant reward systems, you can get attentions really really quick, and it's fun. So as 21st century human beings, we basically spend half our time in the real world living in our house, and then the other half of the time we spend in the so-called virtual world of it. And right now, we're still talking about data at times. Every company, YouTube, Facebook, everyone's fighting for data, fighting for attention. And what blockchain is really doing is adding a new element of it, which is the asset part, how we interpret virtual assets. How's assets going to happen? In my mind, this is how I think. If we can make a token, for example, I have a Tesla and I have a beautiful monitor over there. In the past, if I need to sell my Tesla, I probably need to go to a buyer, seller agency, things like that, sign off a bunch of papers until I can get it hand over to me. But in the future, with all the virtual world going through forward, if we were to sell even a house or a car or anything, it can be sold within seconds. In the past, if we sell a house, it probably takes us up to 6 months to sell a house in England. In Hong Kong, a little bit faster, maybe 3 months. But overall, it's still too slow. We can sell things or transfer assets within seconds. So regarding blockchain, that's kind of how the entire thing works out. Blockchain allows people to have verification, transparency, etc., etc. And in terms of the mining part, is it speculation? Right now, it's very much based on electricity price and all the other things. So I would say not really, but it's the form of idea that how virtual world and virtual assets has improved human lives, or at least has changed our human lives. Before we started the conversation, we were talking about how COVID is introducing a new normal to reality. We were looking at World Economics Forum, thinking about what's the new normal. Now, a lot of people are doing all their things online, and if we have this blockchain element in it with virtual assets, where we can have clear verification over all these things, it will make the internet world, the virtual world, a lot safer. So that's kind of how I interpret our industry.
Okay. Since you mentioned China, let me ask you a question about China. Mr. Xingpeng, you came out with a strong statement that let us seize this opportunity for China and the blockchain opportunity. And he also said that China should be the front runner in blockchain and related technology. But the Chinese central bank, the People's Bank of China, in July has issued a circular that they will block access to all the domestic and foreign cryptocurrencies. So, what is your take on that?
I think right now it's still very early stage in terms of virtual assets and how cryptocurrency is dealing with it. I spent the last 2 years speaking to a lot of regulators from all over the world, or people with licenses, or trying to attain these licenses, and how they view it. And after 2 years, my conclusion is globally, most of the regulators are still finding the best way to adopt to this new normal. Right now, Bitcoin has gone to so big, virtual asset or cryptocurrency has gone so big that it is hard to just ignore it. Every country, every government sees the benefits of it, but like most good things, we're a little bit excited and a little bit hesitant and sometimes a little bit worried. And to be one of the earliest countries in the world to make the statement that they would be pushing blockchain moving forward, this is a big progressive move from the second largest economy in the world. So, in order for that to do so and to not make the people within the country have certain confusion, because there's two things. You can utilize the blockchain technologies, the benefits with it, without having to have your people undergo the speculation of it or put people into certain risk. So I think that was a very good move to manage certain risk for the people in China. Moving forward, when there are more and more things happening, I believe there will be crackdowns. I believe there will be moments when bad things will happen. Every new technologies, something bad might happen. I'm not saying for sure, but likely. We will slowly grow, and then by then, I believe it will be easier for all these globalization talks to come in again. We are always walking towards the globalization angle, and the fact that we are having this call today from different places in the world, and so I don't worry too much. It's just one of the early steps. That's how I view it.
Yeah.
Can we
So,
have Vlad? Vlad, are you online?
Yes, yes, I'm online. And
Yeah, Vlad, you are
do
from
you hear me?
Russia, and I'm sure your opinion would be different from the American opinion, or
Oh, maybe.
Russia is a superpower, and I'm sure you have your own policies. You are in the business of journalism, so you made a lot of people. How is Russia coping with private blockchain and public blockchain? Are there different policies?
Oh, uh, uh, yeah, I see. In Russia, the policy towards blockchain is in massive. Then the we have regulators that are attempting to regulate the industry from different points of view. So uh, there is no difference between public blockchains or private blockchains. But what I want to underline is that the year of 2020 is the first year when Russia started considering CBDC, central bank digital currency. So, I suppose next year, first the first holistic regulatory basis will be released. So uh, I have nothing to say. We can
I'm
just
sorry,
wait
you're not
one
audible,
year.
Raj.
And
Raj, you're not audible. I'm not able to get you, Raj.
So
sorry,
just regarding the China, the Met mentioned. So maybe the China is maybe try to stop and kind of using the cryptocurrency public blockchain, but still because I closely work with the Chinese organizations in the hyperledger community, and they are building lots of on the enterprise blockchain, private blockchains, even the JD.com or different Chinese bank, even they already come with the CBDC, the central bank digital currency, running on the blockchain. So the lots of things are doing. Maybe enterprise blockchain or some central bank digital currency, stable coins, and lots more.
Sure. We have a lot of questions in store for you, Kamlesh. Let's go on to Matt. Matt, you are the keynote speaker for the day. Please tell us your opinion. What's your angle on this entire thing?
Fantastic. So I guess it goes back to our stance point. Most important is like how we stand on it. So 2008 was when Bitcoin first came to the world. And then a lot of early stage developers, when they look at it, they might say things like the banks are evil, the government's evil, power back to the people, whoever works, the miner should get rewarded, verifying transaction. A lot of these ideas of decentralization, transparency, all these things came about. And right now we're 12 years after that already. I started looking into Bitcoin back in 2012. I was a philosophy student back then. When I looked at it, I thought the topic was super interesting. It's borderline philosophical, where how they how the entire perception works. And right now in 2020, when I look at it again, my ideas kind of changed. My beliefs are different from what I used to be. Within the blockchain realm, blockchain industry, we always talk about the consensus. The consensus this, consensus that, which is the necessary mechanism to arrive on an agreement. At least 51% agree with it. So moving forward with virtual assets actually being bigger and bigger, more and more people are getting involved. If we continue with the idea that we should stay unregulated or stay away from central banks or different intermediates, then I think it's a unfair thing. It would stop the industry from growing further. The route that we are taking, our company is called Hong Kong Virtual Asset Exchange. And the same route that I've been taking for the last few years is going through the regulated cryptocurrency route. What that means is we would try to utilize all the benefits with virtual assets, cryptocurrency. But in the consensus part, we make sure we include and work with regulators, governments, banks, like everyone like that. So that's kind of the take that we are holding. Right now, we've been trying to attain the license in Hong Kong with the Hong Kong SFC. We've been spending the last 2.5 years speaking to the SFC. It's a long process. It's never easy to work with regulators. It's a long process. They're great people, but it is their job to be safe and manage certain risks. So 2.5 years passed. Right now, we got our first acknowledgement letter from the SFC, which is great. One of the first, or one of the first few companies in Hong Kong that actually received this license. What that means is we are trying to actively introduce this new digital asset class to traditional finance or to more people, to the general public. And by doing what we're trying to do is make sure that we also get approval from the regulators. That's why they're comfortable. We'll be engaging with insurance companies to provide certain protection for our users and really create a platform that is usable for all, where they can come here and have a safe environment. Now, that is only one part of the industry. Even though cryptocurrency to some people might be a small industry, but within the industry, we have a lot of puzzles that we're solving. Some people are trying to solve the payment problem, such as CBDC related questions. Some people are still going to go unregulated or work on derivatives. Doesn't matter. Our side, our stance, the puzzle that we are solving specifically is how to create an infrastructure layer that allows the general public or anyone to have a safe environment to trade and get exposure to this new digital asset class. I believe we're still very early stage. I see ourselves changing a lot in the next 5, 10, 20 years is when more and more adoption starts coming in. For example, yesterday, DBS, one of the largest banks in Singapore, announced that moving forward, they will also be doing a virtual asset exchange that allows more people to do it. That will be happening in Singapore. Something similar happening in Switzerland. Everywhere in the world, people are trying to figure out what will be the best way to allow more people to have exposure to the new asset class and do it in a safe, proper way. So that's the problem that we're solving. There are certain things that I may not be an expert in because it's still a fairly big industry. There are different areas that different people with different tick, but our tick is if we are to make sure that cryptocurrency, virtual asset is to really go mainstream. In the past, we still remember those 12-word passwords. I still lock it in my little safe at home, trying to protect my Bitcoin. But moving forward, there should be better means, better tools that allow people can, work on it. Kind of like the stock market. In the past, actually, like last month, I was at my parents' place. They brought out a little piece of paper and they said, "Mom, Matt, I bought some stocks from 40 years ago. It's on this piece of paper." I was so confused because I spent most of my life buying stocks electronically. And then I was like, "Oh, why is there a paper?" It's very confusing for me. Moving forward, I think the same thing will slowly happen with COVID, new normal, virtual currency, all these things, all the regulators coming out. I believe in very, very near future, cryptocurrency would be exposed to a lot of human beings, most of us. Some would treat it as a payment, some would treat it as securities, doesn't matter. But the important thing is we're trying to build out that layer that is comfortable or safe for people to use. So that's a little bit about myself and my take on cryptocurrency and blockchain. Hope it's useful, guys.
Yeah, thank you very much, Matt, for that. We will. I am sure we will have queries, but let's move on to the next speaker. Vlad, is your connection okay now? Can Mitesh, is he audible?
Vlad, can you hear us?
Sorry, do you hear me? Well, can you hear me? Is it okay?
Yeah, now we can hear you.
Barely hear you.
All right. So I will speak louder to let you hear me. Let me introduce myself. My name is Vladislav Sopov. I represent U.Today Media Group. It is a journal. It is a media that covers blockchain industry, cryptocurrencies, IT segment in general, and new gen tech, and so on and so forth. So. I would like to cover today the topic of the blockchain and the public services. Do you hear me? Is it okay? Sorry?
We couldn't make that out, Vlad.
Sorry. Can you hear me? Oh.
Yeah, we can. You're not very clear, but yes, can hear you now.
We can't. Should I ask Kamlesh ji to a few queries? Is that okay, Kamlesh ji?
Yeah.
Yeah, Kamlesh ji also has a presentation for us today.
Yeah.
Oh, very nice. Kamlesh, please tell us your opinion. What's your angle on the cryptocurrency and blockchain deal?
So can I use my presentation, right?
Oh, sure, please do.
Yeah. So just so you could see right my presentation.
Yes.
Because I started my career with the enterprise blockchain, I never worked and never used the cryptocurrency. So I will highlight the points as per the enterprise adoption in the blockchain.
Sure.
Yeah, so I'm the VP blockchain for the National Future Tech startup based in India, working in the enterprise blockchain, and also I was leading the Hyperledger India chapter, which is the uh, Hyperledger community is a enterprise blockchain frameworks, and also blockchain is a trust or IP foundation where I'm just leading the that part of that trust or IP foundation where we are building the technology and governance stack to how to bring the trust and transparency over the organizations. So this one. So this is Future Tech, our company, and we are using the blockchain for the issuing the certificates and the credentials over the blockchain, and we are part of the government of India STPI. There are a couple of solutions in supply chain, e-governance, banking, and healthcare. So I will talk about the cryptocurrency is just an application which is sits on the top of blockchain, not other than around. And there are various blockchain frameworks, but I will talk mainly about the Hyperledger. So Hyperledger is a full spectrum of different industry use cases. Is whether you talk about the stable coins or the supply chain, trade finance, identity management, education, even the CSR. So I have some couple of slides about the CSR and climate actions, the work we are doing in the enterprise blockchain. So like for the most people for the in the public and cryptocurrency world they know about the Bitcoin and Ethereum, but other than there are a couple of different protocols and frameworks to building the different enterprise grade applications which will solve the organization trust and transparency issues. So there are Hyperledger Beshu, which is recently part of the Hyperledger, which is the Ethereum Java client, and then Guru, Fabric, Indy, Irova, Satu. So all this frameworks and code base will provide the solution to the different use cases and different industry solutions. So this is a fifth in the last 5 years in the enterprise blockchain. We have 16 projects, and this is the community 170 meetups and 70,000 meetup participant, 4 regional chapters, and so now we talk about this group. So it is a healthcare, social impact, capital markets, telecom, climate action accounting, trade finance, supply chain, education, and public sector. So whenever the trust and transparency is the main issue, we can apply the blockchain. And this is the one of the framework. Is a hyperlayer, there are R3 Coda, there is a Quorum, there is a Ethereum, and many such platforms exist. So early adopters, so it started with obviously cryptocurrency, Bitcoin, Ethereum, and then the different altcoins. But gradually, it's adopting in the finance, where the is a settlement or the CBDC or trade finance product or cross-border payments. In healthcare, is starting from the electronic health record to till identity management, even the immunization passport in the COVID time. All could be implemented. All could be implemented actually. And supply chains, you know about the trade lanes, they are the largest player in the shipping industry. They are on the IBM blockchain and the Hyperledger from last 4 years. So, so we are in the CSR with the CSR in the corporate social responsibility. So blockchain for social good. So everybody want to make sure the product they are using don't contribute to worker violation or promote child labor. So how we can ensure that one? Climate action and carbon accounting. So every industry, every country promises they will maintain this in this industry, this system, that. So all this could be tracked, and there are a couple of government and more than hundreds of organizations are doing this work. And then vaccine distribution and immunization. So with the uh, World Economic Forum or the WTO, this work is being done. Ethical supply chain to track the goods and the products which we are people are using it is ethically mined, ethically distributed. And then identity management. So in the current identity is isolated and siloed in different organization, maybe maintained and run by the Google and the Yahoo's. And then clean tech, energy, solar and distributions. So there's lots of things. So if you see the standard stand for University Blockchain for Social Impact 18 report. So more than 73 blockchain social good companies organizations are doing this work in a different aspect, whether it's land rights, whether it's a philanthropy, health, agriculture, financial inclusion, energy and climate, environment, and governance. So climate action, uh, there are lots of industries and countries are emission the CO2, and there are different work being done by the Yale University and the Open Climate. So this is the one of the companies are doing work in the ethical mining, like in the particular from the source to till product for the customer. We can track it, like who are the workers, who are the people are involved in the mining and the mining of the goods and materials, and it could be tracked from source manufacturer to till customer end. And this is one company being done for the Rwanda. And this is the identity management. This is the live in. So this is live case. So this is British Columbia are using the blockchain for their identity and issuing the identity to the organization, issuing the licenses and the work licenses to the different organization. And the millions of identities are issued and verified on the this blockchain platform. So all of this about the different work being done by the in the enterprise world. So this is I talked about the Hyperledger framework where there is the R3 Coda, various hundreds of banks are part of those R3 consortium and work in the whether there is a settlement process, whether there is a cross-border payment, whether there is a identity management, KYC processes, and so lots of it. So whenever, in my personal belief, whenever we see the trust and transparency issue, industry and use case doesn't matter. We can apply it, and it could solve the many problems what we have today. So all this from my side, and ready to take questions.
Kamlesh, I have a very specific question for you.
Yeah.
Now, when you are giving examples of mining from Rwanda, or CSR or doing good, that is basically a private blockchain. Yeah.
Yeah,
So
right.
private blockchain has been in existence for the last 20 years. Cryptocurrency is hype for the last 10 years. So private blockchain was already in existence for the last 20 years, much before we started mining cryptos.
Yeah.
And this is just an extension of that. So, while it is easy to talk about an industry or a company, using a supply chain and private mining, that is just like Swift. By Swift is a system used by banks for the last 50 years now, right? So there is basically no difference. It is really the same thing. Private blockchain, or a private blockchain circle. Now, when you are talking about private blockchains, and when Matt is talking about public blockchains,
Yeah.
it's a very big difference from private blockchain to public blockchain. I can have a private blockchain installed within my house for the 10 members of my house, and it still functions like a private blockchain because I have access to all the people and the data. When you're talking about public blockchain, then you're talking about irrational, access of data. You do not have access to data. No government has access to data except maybe the Chinese government. Yeah. So, when you make a transition from private to public, how does a company like yours do the fulfillment? Because it is easier to do projects on private, but when you're talking about public, you're talking about unlimited access, unlimited data. How does it really happen? What are the factors which you need to consider when you're moving at a public domain level?
So nowadays, at the kind of interoperability level, we can call to any organization and any kind of APIs, and that we can be connect. So, for example, there is a Cactus project where maybe your your system processing you do on the private blockchain and issue the token and asset on the public blockchain via transferring data to the public blockchain. That is already people are doing it. So So it's a matter of like, for example, like public blockchain, we can't implement in some banking system because they have their all set of limitations. And suppose, for example, ERP implementation. So suppose there are couple of organization, supplier and buyer are working in one closed consortium, and is not is wisely choice to write the all data on the public blockchain and public environment. As so at the later, for example, in the Ethereum, in the Bitcoin, you could process only up to hundreds of transactions per second. But if you talk about the banking system, it could process 50,000 transactions per second, and the public blockchain can't scale on that on that level. So on that time, in this scenario, the private or consortium blockchain, enterprise blockchain, where you could do the some kind of consortium uh, between the participant of your transaction processing and implement that thing there. And suppose if you want to be issue some kind of tokenization, some kind of asset, virtual asset, then you can transfer that data to the public blockchain. For example, in the our climate action work, what we're doing with the hyperlayer community, so we are tracking the CO2 emissions and the everything on the private blockchain. And then when we want to issue the CO2 token, we are connecting with the Ethereum mainnet and trying to issue the tokens there. So
Mhm.
in the future, both combination going to be exist, public and private both. So we can't do the all the kind of private transaction on the public blockchain, and we can't give the value to the asset and the currencies on the private blockchain. Both should coexist.
Sure, sure. See, let me get on to my next question on the costs. But I will come back to your mining, because see what happens is when companies do ethical mining and then they apply blockchain, is the case study that you are telling us.
Yes.
That is ethical in any case. And then there is another segment like the black money economy, which runs on its own. So people who are doing mining illegally, they will not use your blockchain, and then that mining is done. So really, this is only a ledger. It does not prevent illegal mining. You're only creating a ledger for the legal. That is good, but in no way does it reduce the amount of illegal mining that is going to be done, because there is no connection between these two. So you are doing something legal and you are creating a blockchain which is good for you.
Yeah.
But how does it reduce the amount of illegal mining? It really does not.
Yeah, agree on that part, because maybe corruption or illegalities come from the human thing. So everything we can't solve as technology. Right? We could say, yeah.
Sure. Now I have a question for you and Matt. The question is, in the credit card business, a very typical business, very different business. One, we can assume that 1% of all the transactions are fraudulent. Yeah. But the cost of that 1%, bearing that 1% is easy. Banks, are tuned to absorb that 1% loss. But the cost of using blockchain as a ledger for every credit card transaction is so high that my friends at banks tell me it amounts to 10% of the transactions. So it really does not help them to use blockchain for every transaction. They would rather easily absorb the 1% loss on 1% of the fraudulent transactions, rather than making zero fraudulent transactions, everything traceable with a 10% cost. Now, this happens because of the cost. The cost is very high today, right? So, do you, Matt or Kamlesh, do you see the costs going down in the near future? How does this happen? How will the cost
Okay.
go down? Why will the cost go down?
So fraudulent, just avoiding the fraudulent transaction, blockchain is one thing. But if you see the credit card processing and settlement, there are maybe 20 to 30% just cost associated with that processing thing. So maybe blockchain could solve that processing timeline, reduce the settlement processes. Like for example, if I using my HDFC card to different 10 banks, and at the end of the billing cycle, the HDFC need to be reconcile all the data, and that required efforts, systems, and time. So if you implement the blockchain with all the participants, then it could be real-time settlement. There is no further involvement from the this thing. And another thing, so I think, and about the cost. So when we talk about the blockchain cost, when you're using the public blockchain, there is a mining Ethereum fee involved. But when using the private or consortium blockchain, there is just the infrastructure cost, the IT system cost, not the any mining fee. Because in the consortium blockchain, there is no any kind of fee and gas and Ethereum was involved.
Mhm. Okay, okay. So before I put on the question to Matt, I would like to make an announcement. We have two very strong friends and very strong supporters of CASI who have just joined us. Vanda from Poland. Hello to you, Vanda.
Hello.
And Hayden from Trinidad and Tobago. Hi, Hayden. Good to have you here.
Hi, good day. Listening intently as usual.
So Hayden is a regulator. He was a 2017-20 CEO for the Securities Exchange Board at Trinidad and Tobago. I was actually waiting for him because when you're talking about cryptocurrency, we would love to have a regulator on the screen. So Matt, please tell us how are the costs going down? How and when? Why? How does it happen?
I see. In short term, I don't think it would go down by much, depending on which blockchain you're using. Because a few problems that we've been spending a lot of time trying to look at it for the last couple of years is what to put on a blockchain. Are you supposed to put every single data or information on a blockchain, or just important things? So a couple of months ago, I was working on a blockchain project for the Hong Kong government. So they are building out a construction project. We're just doing a data management project using blockchain to basically help them store the information. As government, as construction companies, or on this construction department, the last thing you want is when a building collapses and then you try to look for the data and the data was 50 years ago, 100 years ago, and it's not there anymore. So at first we're like, should we just put all the information on the blockchain? But it was impossible because each project was 32T. 32T, that's a lot of gigabytes. So you cannot put that information on. So one thing that we need to look at is, we cannot see blockchain as one singular thing. Even when you look at private or public, it's already two things. You look at proof of work, proof of stake is another two things. And what should you put on the blockchain is another thing. We're still very, very early stage right now. I'm not a tech person myself. I've been spending a lot of my time on regulated stuff or like securities, things like that, mostly in the token side. So one day maybe some new technologies came out to find a way that is safe, transparent, and extremely fast, and it might work out. But for now, the blockchain industry is still fairly new. There's a lot of problems that people promised that they would solve everything. I don't agree. There are a lot of problems that we cannot solve yet. It might take time, or it might be solving parts of the puzzle. Just because there's blockchain doesn't mean the entire government can go to rest and go to sleep because everything's transparent on the blockchain. It's not like that. It's just one of the tools. It's kind of like electricity having its limitations. Blockchain has its limitations as well. So right now, to answer your part, in terms of what we have in terms of the technology side, and what the banking system has at the very moment, or even if you look at Visa, it might not be a perfect solution. I've spoken to countries or regulators who are working on CBDC as well, and they're saying, oh, maybe blockchain slows things down in a way. Like if we verify everything, we have to either go proof of stake, then it's no longer decentralized. There's a lot of these things that you need to take into consideration. But I don't worry too much. I'm a super believer within the industry. I'm one of those guys that, there will always be problems that we need to solve, and we would slowly get there and solve one by one. A couple of months ago, like one of my investors was telling me, it's like when Elon Musk was building his first electronic car, they had no clue how to build it. They tied 7,000 batteries on a car. It was basically a moving bomb. Like if it crashes on anything, it just boom, explodes. So a few years down the line, right now, they're one of the biggest companies in the world. Stock price going crazy. There's a lot of benefits going on. That there's a lot of problems that they had to solve. And in terms of the blockchain industry, we're still early. I'm sure there will be ways that we can sort up. I'm sure it might end up being some of the decentralized things would continue to be slow. The things that are able to be centralized maybe will be quicker. In a private blockchain perspective, it can go super fast. So it really depends on the subject and what are things that we'll be working on. It's not a super general, one thing solves everything kind of idea. That's my answer for it.
Sure. Thank you very much. Do we have any questions? Vanda, Hayden, Sandeep?
Hello. Firstly, I would like to say sorry that I was late. I had some problem with my internet. So I have a question. If there is a lot of implementation other than cryptocurrency with this blockchain, but theoretical, I know, but in practice, do you know such implementation?
Yeah, Vanta. So there's a trade lens. If you know the trade lens, there's a shipping industry. They have put the millions of data shipping containers and the supply chain. There's one. There is a Walmart, the food traceability. They are tracking the food items, food products from the farmer to till the person who are having the lunch and dinner. And identity management, I just shared in the presentation that British Columbia, they have put the millions of organizations' identity on the blockchain to kind of easily giving license and issuing the work permissions, those things. And like mentioned about the use case about the Rwanda, the circular company, they're doing the ethical mining, means like whatever the some kind suppose the tantalum is a metal used in the car battery, and every whether every car may come to use that batteries on their car. So and Rwanda is I think 80 to 90% produced and mined by the Rwanda only. They have put in those things in the and similarly, if I talk just about the hyperledger community, we have hundreds plus use cases in the different aspect, whether it's a CASA, whether it's a banking, like the trade finance, there are multiple companies, multiple like Standard Chartered, HSBC, CCT Bank, and lots of people are doing it. In the educational, there are people are issuing the certificates on the blockchain.
Thank you.
I have a question,
Please.
especially from the regulators. While I did get a lot of perspective both from Matt and Kamlesh on how it is evolving and it's still in its nascent stage, what I wanted to understand from the regulators' perspective is that what is the biggest worry? Why is there so much of aversion, or aversion may be a strong word, maybe so much of caution around it? While risks are involved in almost everything, what is the sole cause of so much of caution around cryptocurrency especially?
Yeah, mate, go ahead.
Yeah, well, okay.
We do have a
Can I?
regulator. Yes.
Yeah,
Yes,
can I
please.
step in at this stage? And let me just say that from a regulatory perspective, the fullest development of blockchain is encouraged, and we look forward to implementation. As long as the costs and the other issues are satisfied and dealt with as soon as. So there's no issue with a more robust, more usable platform, which is what blockchain is. A lot of the focus of the regulator relates to the whole function of raising money in the market via initial coin offerings. Because what has happened over the years is that this is where a lot of the fraudulent activity is concentrated. So you have operators that have gone into the market to raise funding, and there's no sort of regulatory oversight because there are no regulations in most jurisdictions that would control and monitor the activities in that area. And so that leaves a lot of room for rogue operators to raise money and to engage in fraudulent activity. So that's I would say the major area of concern from a regulatory perspective. There are several jurisdictions that have evolved and introduced laws and regulations to kind of be able to manage activity in the US, in the UK, in Canada. In the developed world, not so much. But so that's the fundamental area, ensuring that all these sort of buckles and bootstraps that protect investors in the normal market when there are initiatives to raise money, IPOs and so on, ensuring that those protections are available in the digital world. So it's a work in progress. I think we will get there within a few years. But until that happens, that is why we sort of encourage and advise investors, prospective investors, to exercise caution when considering those options. I hope you heard everything I said. I'm sort of multitasking today, as you can see.
Yes, thank you. Yes.
No, thank you very much, Hayden, for that. That was that was clarity for us. I'll give you my two bits, Sandeep. What happens is, one, there is lack of cyber hygiene, globally speaking. So that cyber hygiene is basically an issue. And the second issue is, see, when India prints a note, you print, a 100-rupee note, that's roughly equal to $1.2. But when you mine a cyber currency, the exchange rate is not controlled globally. So what happens is, every time you print a 100-rupee note, it's equal to $1.2, and that $1.2, that exchange rate is managed globally. So every currency is today pitched against each other, and that's a very fluid system which is perfectly managed, and everybody understands it, and that is how the trade and the GDP and everything functions. But when you suddenly start mining a currency on your own, there is no exchange rate control. So let's say suddenly a small country mines $20 billion. So what really happens? Then the currency of that country becomes 1:1 with a US dollar. Now that has no background with the GDP or the production or the mines or the gold in that country. And suddenly that country will be 1:1 with the US dollar because it has started mining cryptocurrencies. So because of that reason, and because every country will not be upfront in how much mining they are doing. And that is primarily the reason we cannot trust each other. The countries cannot trust each other. And that is basically the cyber hygiene. For my personally, I think that it's a very difficult thing to be accepted as a universal currency because of this particular reason. Because it will the entire exchange rate of countries will go for a toss, and there is no way to understand it. It's a parallel system where you have no idea who is mining it. So, but I'm a big time believer in blockchain technology, not the cryptocurrency one.
I see.
Yeah.
I would disagree. Most of it, actually. I'm sorry about that. I defend my industry very well, and so I need to share that part. So I have to say disagreement first, or else I'm going out of business. First of all, like, I've been giving a lot of speeches, and I think the biggest confusion that most people make is going between a few ideas of what is cryptocurrency and what is blockchain, and do you treat it as a payment? Do you treat it as a security? Do you treat it as a means of fundraising? Do you treat it as something that you simply mine and then an unlimited supply? Or is it simply the blockchain side that makes everything transparent? So the important thing that we need to go for is we need to understand which part we're talking about. If we're talking about the blockchain as a technology itself, Kamlesh and Hyperledger would do a fantastic job, because everything that they're doing is taking blockchain's essence and using it as a technology means and going forward. So they were solving different real life problems, bringing different platforms together, making sure that works out. Fantastic. That's a blockchain perspective of seeing it. Meanwhile, when you look at Bitcoin, in Bitcoin itself, first of all, it's limited supply. Forever, there will only be 21 million Bitcoin that we can mine out. There will not be more, there will not be less. Maximum will be 21 million. So there won't be a possibility that we can mine something more after 20 million plus one. That doesn't happen. After the 20, well, the last one is mined out, the miners would only get transaction fees. That's the function of Bitcoin and why it's what we call deflationary model in comparison to US dollars QE, for example. They can potentially print more and then it makes everything devaluate. So because it's limited supply and everything supported, the mining is supported by electricity, not by speculation, by electricity. That's why people can defend the price. That's why people treat it as digital gold, because it's limited supply. So that's just Bitcoin itself. Ethereum has its own thing. And cryptocurrency itself and how the other things, like there are definitely some tokens, ICOs that we worked on before, that they just print out their own tokens. Where they're backed by nothing, no one believes it, doesn't have a secondary market, no liquidity, all those things. Yeah, those are arguably problematic. That's why as our industry, as my job, my daily job is to make sure we work closely with regulators to choose certain cryptocurrencies that we believe is suitable, that is either asset-backed or that is transferable to something that we understand instead of just go to zero in like a second. So when we look at a topic, again, the story that I always tell is imagine, if there's 5 people that they cannot see, they're blind, and then they're trying to touch an elephant and try to describe the elephant. The first one touches a tail, say it's long, it's swingy. The other touches the trunk, the other touches the leg. And when they describe it, they're all saying different things, but they're trying to describe the same thing. That's the same thing with cryptocurrency or blockchain. A lot of people are talking about it, but essentially they're describing different parts of it. So we have to be clear on what we're talking about. If we're specifically talking about, Bitcoin, then limited supply. So that's my take on it. Hope that helps explains it to some of you.
Sure, absolutely. The entire plan is to get your angle. So that was your angle. Yeah. So yes, that really helps. We come to the end of the session. We have time for 1 or 2 questions. I had a question from Patrick. On social media, why is CASI organizing something on blockchain? So I thought, let me answer that today. CASI is the world's largest platform for CSR sustainability, and what we mean by that is diversity, inclusion. Every kind of a sustainable goal is included at the vision of CASI. And we strongly believe that blockchain as a technology will help us create a sustainable future. And the entire philosophy at CASI is to be open to angles, and that is why we invite people to showcase their angles, on this show. So it's always an angle. As for me personally, I am a hardcore believer in blockchain for healthcare. It could save millions of lives. I would love to have a ledger which shows every medicine that I have been ever prescribed to, so that the next time I fall ill, my doctor knows exactly what to give me and the how much. So I am personally a hardcore believer in healthcare. Maybe my exposure is not yet up to the mark in the various other facets of blockchain, which I'm sure I got to learn a lot today. So Patrick, that's why we promote blockchain. It helps in a sustainable future.
Thank you for that. I appreciate the answer.
Any questions? Anyone? Any questions for anyone? Do we still have Vlad? I really wanted to listen to what happens in Russia from Vlad. Some 2-3 minutes. What is really the scene in Russia would be very nice, Vlad.
Yeah, he's still there. Vlad, can you hear us?
Yeah, please.
I got a message from him. He's saying, unfortunately, I can't fix my connection.
Okay. No worries. Do you have any other questions, Patrick, or we call it a day? Anyone?
Well, just one thing about the sustainability issue, building on what you just said. Can someone give me an example of how the verification is falsified? Because I always hear this verification of products and so on, but how would blockchain show that something should not be verified? Is that possible to say you have something that's gone through all these processes or a supply chain or whatever? How do you know that this is not okay because of blockchain? Does that make sense?
Yeah, it makes sense. I will just give an example about the healthcare supply chain. What Patrick mentioned about it. For example, in the suppose COVID time, suppose in the I think there is one new vaccine where you need to maintain the minus 70 degrees Celsius temperature, right? And now suppose this vaccine are distributed across the different countries and different places to vaccinate the people. So how we will ensure that that temperature is maintained in complete supply chain? Because for example, the who are shipping it, he will always hide the data, like it will how it maintained, where it is stored. But if you put some small sensors on the vaccine boxes and record the data in real time on the blockchain, so we will get the data in real time. And if anytime even we could put some kind of smart contract, like suppose for example, if temperature goes below minus 70, then it will trigger and record the data on the blockchain. And someone at the hospital side, if someone want to verify that medicine and the vaccine is uh, correctly maintained across supply chain, he could just put the scan the QR code on the vaccine street or in boxes and can see the complete data till from manufacturer place to till different warehouses, suppliers, and till hospital place. So it will give a clear picture. So this kind of use cases could be the cases.
Yeah, but pointing out negatives is a different story, Patrick. What happens is, Sandeep's company is one of the world's largest companies in food. The QSR format, quick service format, and any batch of chicken or lettuce, they would easily come to know where was that produced and when was that procured, where was it stored. So it's a matter of supply chain, and this is only an enabler of supply chain. So that has been in existence at Sandeep's company for many years now. So when you apply blockchain to that, it really helps you in supply chain.
And
But I'm just thinking.
Walmart is using and mandated their supplier to be adopt the blockchain for their complete processing, complete end-to-end supply chain. And it will bring the trust to the buyer, like who are buying from the stores. They know it, like from where is mined it, where is produced, and who are supplier and buyers, the complete chain.
Absolutely perfect. Thank you very much, Patrick, for those questions. Thank you, Matt, Vanda, Sandeep, Hayden. Thank you very much. If you have no other queries, Bitesh, any queries?
No questions.
Can I just bring? I don't know if this was discussed earlier in the presentation, but one area in which digital currencies can be very useful and relevant relates to digital currencies issued by central banks as against private issuers. In my part of the world, for instance, because of issues with correspondent banking relationships, some of the regional central banks have made a fair amount of headway in terms of being able to issue digital currencies to deal with their monetary activities and to address their monetary issues. That, you know, when it's issued by the major regulator, then that removes concerns over a lot of the concerns over digital currencies, and it can in fact serve to sort of enhance the economic development of the region. So, I just wanted to put a plug for a positive on the issuing and development of digital currencies, and I don't know if it was discussed earlier. There's a lot of utility to central banks issuing digital currencies themselves, as against relying on hard currencies. So that would be my sort of 2 cents on this issue.
Yeah, CBDC.
No, absolutely. Hayden, that was good. From a regulatory point of view, we understand your angle would be very different. Yeah, so thank you all very much for joining us today. This is Paresh Seth, and thank you very much for joining us. Thank you.
Thank you.